Let's pick up on the markets now. The local index facing mixed global trade and market pressure from the U.S. overnight as most markets mostly closed in the red. Meanwhile, investors are awaiting the outcome of the Federal Open Market Committee meeting today in the U.S. on the back of Friday's worse than expected U.S. inflation data. Jimmy Moyaha is an independent analyst, and he joins us now to make sense of some of the market moves. Jimmy, top of the morning to you, sir. Let's start with how the JSE is performing in early trade.
Good morning, Chloe. Morning to the viewers. JSE's opened fairly weaker in early trade. We're seeing that this weakness is following on from Asia sessions weakness and the anticipation around what is to come later today around the FOMC meeting on interest rates. We're seeing that Naspers is trading down following 10 cents trading lows mid session, but we're also seeing overall concern from the market and some jitteriness around the unexpected news that could come and potential higher than expected inflation or interest rate announcement from the FOMC around.
Yeah, let's touch on the company news. And we start with Growth Point Properties. They've published an update for the 9 months which ended on the 31st of March this year. Talk us through how their numbers are looking.
So Growth Point reported that some of their business assets are doing better than expected. They reported some recovery in certain areas. They did note that they are still under pressure on the office rental side of their business or office rental portfolio, but they said that they're managing that and they're looking to streamline that portfolio. We know that portfolio's concentration, a lot of it at the moment sits within some of their Sandton offices, and they're saying that they're seeing a return to office from some of their companies, or some of their tenants rather, and they're seeing an extension in certain lease areas, but they're saying that the international portfolio has been star performing, doing really well, allowing them continue to maintain a strong balance sheet, allowing them to earn quite a bit a revenue perspective from that international portfolio. They did also add that things around South African situation did affect their South African performance, or the portfolio rather, so around the unrest that we saw, around floods that we saw in KZN, and sort of the electricity disruptions that we're experiencing from an export perspective. So Growth Point will cite that their office portfolio under pressure, anything else looking.
Jimmy, the line to you, not playing ball at all. I wonder why this line does this to us all the time. I'm going to attempt the next question. If it does fail us, then we may have to cut this conversation short. Let's try and get into the topic of ComAir. According to papers that were filed by the business rescue practitioners, Nedbank has the biggest exposure to the ComAir turbulence. Talk us through some of the other creditors and the kind of risk they face now as a result.
Yes, I mean, Nedbank's exposure obviously at about 1.7 billion rand. We've also got guys like ABSA at about 340 million rand, Investec at about 215 million rand. So each of these investors and creditors at this stage have invested differently in terms of where their debt is. From an Investec perspective, for example, they've provided a loan facility that's both equity and debt in structure, whereas you've got Nedbank that has provided financing for planes that ComAir operating in, got about 15 aircraft, and they've provided for some funding towards that. There's also a debt of about 630 million, and that's for some aircraft that grounded that were not operational safety concerns. But different creditors are involved at different stages within ComAir, and to see how these creditors we go liquidation.
Jimmy, unfortunately, we're going to have to end the conversation there. The line to you, not playing ball at all. Let's apologize to you for that weak audio line. The visual Perfect, but it's just the sound coming from Jimmy Moyaha. Unfortunately, we have to end that conversation there. Independent markets analyst.